Hey guys, welcome back. I'm Jeb Smith, and in today's video, we're going to discuss the pros and cons of FHA financing. Is FHA the right fit for you? Maybe you've been qualified for an FHA loan, but you're not sure of the upside, the downside of doing that type of financing. Well, that's what we're going to discuss today. This is a video that I shot with Josh Lewis of Buywise Mortgage last week in a much longer conversation, a longer mortgage update, which I'll link to above here if you want to watch the whole thing. But what I did is I cut this section out because I thought it would be helpful for any of those considering FHA financing. But before we get into that video, I'd like to ask a favor. If you're new to me, you're new to my channel, do me a favor and hit that subscribe button if you're interested in all things real estate related, whether it's buying or selling real estate or staying up to date on mortgage finance. But for now, let's take a minute and watch that video. And then at the end, what I'm going to do, there is one con, one downside that we missed in our discussion, and I'll bring that back at the end and discuss that with you. But for now, take a look at the video.
Let's talk about FHA, right? So some of the pros and cons of doing an FHA loan, right? If you're out there in the field, or in the business at all, or maybe you're a home buyer and people have told you FHA isn't a good loan or what have you, right? So there's kind of this this misnomer, if you will, of what FHA is, and I think a lot of people don't understand it, right? So if I'm going up against a conventional offer in some cases and I have an FHA offer, the agent on the other side may look negatively upon that FHA offer and not really understanding the reasoning that buyer went with an FHA when they could have gone with conventional for whatever reason. That's a whole different conversation. But why don't we talk about let's start with the advantages of doing FHA.
So the advantages are pretty obvious, and that's why the advantages are one of the reasons why listing agents, when they're reviewing offers, sometimes will look down on an FHA loan. FHA is much, much more flexible on credit, like infinitely more flexible on credit than a conventional loan. So sometimes people will erroneously jump to the conclusion of, if it's FHA, they must have bad credit, which is not true. We do FHA loans for perfect credit borrowers all the time, but that's your number one flexibility, is additional credit flexibility. The second piece is debt to income flexibility. You can go to a much higher debt to income ratio than a conventional loan. Now, whether that's prudent for you and your situation is for you to decide. But in a tight affordability market where buyers are getting squeezed and being asked for highest and best offers, we can have some more flexibility and some more wiggle room to go higher on an FHA than we can on a conventional loan.
Okay, so I'm going to explain that in layman terms. Basically, what you're saying by a higher debt to income ratio means that I can actually qualify for more home in most cases using an FHA loan than I could, say, using a conventional, because they allow me to pass that certain threshold of what Fannie Mae and Freddie Mac would allow.
Yep. And another sort of incorrect myth about FHA, back in the day, so before the meltdown, 2008, 12, 13 years ago, FHA loans and VA loans, because they have higher default rates than conventional loans, had higher interest rates. And after the mortgage market meltdown in 2008, the bond markets finally figured out that, hey, although Fannie Mae and Freddie Mac loans have an implied government guarantee, FHA and VA have a literal government guarantee. Right. These will never not pay off. And ever since that time, FHA and VA loans have had lower interest rates than conventional loans. So as an example, for a client I talked to this morning, we were looking at a 5% down conventional or 3.5% down FHA. It was 3.25% for him with his 682 credit score. It was 3.25% for the conventional loan. It was 2.75% for the FHA loan. The FHA is going to have a much bigger interest rate. And at that, the 2.75% had like a $1,500 credit to him for his closing costs, where the 3.25% was just a 0-point loan. He wasn't going to get any credit towards his closing costs. So we like to point that out. The next biggest differentiator between the two is mortgage insurance. FHA, for a low down borrower, unless they have spectacular credit, the FHA is going to have a lower monthly mortgage insurance. FHA with a minimum down is 0.85% mortgage insurance. If you put 5 or more % down on an FHA, that drops to 0.8. It's not really an advantage. So just call it 0.85. For this guy, we were looking at like a 0.98 mortgage insurance on a conventional loan. So 0.5% higher interest rate, 0.13% higher on the mortgage insurance rate. But that doesn't tell the whole story, because in conventional's favor, there's no upfront mortgage insurance premium. On an FHA, part of how they manage the mortgage insurance fund and pay off on the loans that do default is they charge you an upfront mortgage insurance premium at closing. That amounts to 1.75% of the loan, and 99% of the time the borrower doesn't pay it out of pocket. They finance it onto the loan. So you're putting 3.5% down, but then you're putting 1.75 back on top of that. So you're going to end up with a little bigger loan. So my borrower that we're talking about could have had on his $500,000 purchase, he could have 2.75 on an FHA with 0.85 MI with 3.5% down, or he can put 5% down, have 3.25 with 0.9, it was like 0.98 mortgage insurance. So the FHA is going to have a much lower payment. He's going to have a higher loan on it, but he's going to come in with way less money to close. So that's kind of gets back to, there's not a right answer here. They're both good options. I mean, if we could go back to 2018 and tell buyers, hey, I can get you 3.25 on a 5% down conventional, they'd be ecstatic. So there's no right answer. The right answer is get them on paper, look at them side by side, and determine which one is best for you. And, you know, going back to the whole thought of whether a listing agent thinks it's better to have a conventional or an FHA, if I'm looking at both of them, and you know, Jeb, you know, when the market tanked, I flipped over 40 houses. When we were reviewing offers of people looking to buy them, we never looked down on an FHA loan. We would go through it and say, give me the strongest buyer. If anything, FHA has more flexibility. It's less likely for that loan to get declined and get screwed up because of the additional flexibilities. At the end of the day, money's money. Whether the money comes from the bank or it's all cash from the borrower, the seller is going to get their net at the end of the day. Compare the nets and then tell me which loan is most likely to close. The FHA is more likely to close than the conventional. We close 100% of our loans. I can't tell you in the last 5 years we've had a purchase not close, but you know, on your side of it, it doesn't always happen that way.
No, absolutely. And I tell sellers that all the time when comparing offers to them. You know, one's a cash offer and one's a loan, and they're like, well, we have to accept the cash offer, right? And I'm like, no, we accept the best offer. I mean, if one is higher than the other or whatever the terms are, I mean, they're both money in the bank. You're not getting the money until the property sells, regardless of whether it's a cash or a loan. So at the end of the day, you shouldn't really care. Let's just look at the full terms of the transaction and make the decision from there. But one thing about FHA, and I will call this a con on the FHA side, is that appraisals, right? They're more likely to pick apart things in an appraisal, right? So if you've got an unpermitted addition, you've got something on a property. A lot of the stuff we see in Southern California, I don't know how other parts of the country are, but here we have a lot of, you know, things that have been converted, whether it's garages into rooms or, you know, a patio off the back has been converted into a room, or maybe there's a door leading from the garage into a bedroom, just certain things that aren't right with the property. Conventional isn't going to call those out in most cases, or they're at least not going to give them value with the unpermitted additions, where FHA, and at least in my experience, may be more stringent on that and may come out and make a comment about that needing to be, you know, converted or permitted or what have you. What's your experience with that? And is there anything else that I'm missing on that?
For the most part, it's not an issue. What I will say, a couple, 2-3 times a year that we will come across with the FHA loans on a pre-1978 home, where you have the potential for lead-based paint, they will not allow any chipping paint anywhere. So that comes up. They'll say, you got to scrape and repaint this. That comes up, like I said, 2-3 times a year, every year. The FHA regulations require the appraisers to do a visual inspection of the property. They're not home inspectors, but they are required to do a visual inspection. They make them stick their heads up in the attic and do some other stuff. So for the most part, unless they see something that is obviously a potential health and safety issue, it's not going to come up. So to me, for the most part, they're functionally identical. If we have a property that's in really bad shape, it could be an issue. On the FHA side, as long as the non-permitted addition doesn't lead to a health and safety issue or cause you a problem with not having enough parking, you have a converted garage and now you don't have enough parking to meet zoning for the area, there's some things that can come up. But usually, you know, we'll just have our listing agents. If Jeb goes to list a home and say, hey, well, just tell me what you got. We'll pre-flight it and make sure, hey, FHA we're good, VA we're good, conventional we're good. And then that way, you know, when your offers come in. You know, usually you guys are out inspecting properties. You know when there's something that might come up and be an issue on an appraisal. So for the most part, they're really not an issue, but we do end up scraping paint a couple times a year.
Okay, so what I heard was really good things about FHA versus, you know, on the pro side. The only negative was the mortgage insurance, which in both cases, you're going to have that whether you're doing conventional or FHA. If you're putting, say, 5% down or less than 20% down, you're going to have that mortgage insurance. Anything else we're missing there on the downside of considering one versus the other?
The one that gets thrown out to everyone is back in 2008, the Obama administration, they made a change because there were so many losses on FHA loans. They made a decision to change the FHA mortgage insurance fund to make mortgage insurance permanent for the life of the loan. On an FHA loan, you can never get rid of it.
Right.
And that's brought up as a big negative. And I said, well, you don't really remember what the guidelines were before. It was on there for 11 or 12 years. You couldn't get rid of it for 11 or 12 years. Most people don't stay in a home and in the same loan for 12 years. So it was virtually permanent before. It is permanent now. And if the home goes up in value, there's ways of getting out of it. We can then go to a conventional loan. So it's made to be a big negative, and I would say it's a slight negative for FHA loans.
Okay, after watching that, what are your thoughts on FHA financing? Is it a good fit for you? What do you think about the upside versus the downside? I'd love to hear your thoughts. Do me a favor and comment below. If you have questions about what we discussed, you can also put those in the comments below as well. I'm happy to address those. As far as the other downside that we didn't discuss, that has to do with seasoning on flipped properties. If you are a buyer looking to buy a property that has been recently flipped, so it's been purchased, it's been rehabbed and put back on the market, FHA requires a certain seasoning after that home has been purchased before it can be resold and before FHA will do a loan on it. So that could be a downside to that. So if you're considering buying a house that was recently flipped, keep in mind that FHA may not do financing on it. But for everything else, it sounds like FHA might be a good fit for you, but I'd love to hear your thoughts. So do me a favor again, comment below if you have questions. And as always, I appreciate you taking the time to watch. We'll see you again soon. Have an awesome day. Bye-bye.